Good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, March 31st, 2022. And another very interesting day in the markets, with basically both the NASDAQ and the S&P doing the opposite of what I thought they would do today. Not that that's so out of the ordinary, because the NASDAQ often can throw a curveball at me, but I did not expect it to decline as much as I had expected it to rally. So it declined. The cash market in the NDX declined 233, whereas the future was down much more than the close, the close of the after hours, but it managed to rally its back up to being only down 154. And I was anticipating today that we would be up between 150 and 200 points as we soared to complete this whole intermediate wave 2. So here we have it on the daily. I'm starting again on the daily because I want to show that we're getting close, that what I was looking for yesterday, or what I pointed out yesterday, which would add fuel to the rally fire, was this moving average, the 200 moving average right here. And see how flat it is, how absolutely flat it is. That yes, it's providing support, but it's now turning the 8 and the 4 away from breaking. It's now turning it this way. Now, granted, the market also did that, but this is now, and I'm looking at it as like it's acting as resistance for the other moving averages to get up above it. Now, that is just the way my eye is seeing it. I mean, I don't think there's anything to it, but if you remember what I was discussing is that when the 8 and the 4 actually would break above this 200 on the daily, it would likely give us a little extra boost for the buyers to keep stepping back in and taking the market higher. So as I left it yesterday, let me drop back down to the hourly now, because now you can see that 200, the daily 200, it's got to hold. If it breaks, the market's in trouble. So in terms of, I'll go over that in 1 second. If it breaks, what that will suggest in terms of where we are and what's going on. Now, I'm going to leave this labeled as 4 for right now, but come on. There we go. Pull it in here a little bit so you can see it. You can see that the hourly 200 is now definitively in play. Wave 1 is definitively in play. This came down and touched, which should be support, at 14,855. And this is after on Tuesday, we're reaching 15,268. So it's very quick. In 2 days, we're back below 15,000, well below, getting ourselves below 14,900, getting to the mid 14,855. That was support. It's holding. If it breaks further, yes, I can likely move this down and move this down to keep this alive, but not just to save it from breaking, because I think further breakdown then puts this as a 4 in total jeopardy. And then I would take a second look to see that the possibility that this 3 comes down to here, that's the 4, this is the 5, and the wave C, and the intermediate wave 2, and we are in that beginning stages. But here's what prevents me from doing that early or likely. Yes, it broke solidly lower, but it did it mostly in the last hour yesterday and then the last hour today. So I'm talking that if the tops are in, the buying that we saw today should not even exist. It should be just a quick and it's a turn. Now, whether this is because we have a number of traders out there who are seeing whatever I'm seeing in terms of that the bonds are in some serious trouble, that the Fed is in serious trouble, that, you know, interest rates as being implied by the movement in the 2-year and the 5 and the 10-year note, they're pricing in a lot more than 7 increases of 25 basis points, and I'm putting quotes on that because that's what the Fed has basically said. And so the market telling that's all priced in and we're going to go is a folly. The fact that the dollar didn't get necessarily super bashed today, but it was a lot weaker, and that suggests, you know, that inflation is now, you know, gaining up on everybody. And what could be going on, and then again, I'm just repeating something that someone presented to me, and it makes sense, is that, you know, if the market is searching for ways to move higher, there's one theory that if we actually have higher inflation, so again, as each report that we get about higher inflation, it seems to just bring more buyers out and they keep shoving it up higher. There is this, if we go back and we look at what happened in Venezuela, of all countries, that they went through a period of hyperinflation in the country. And their equity market increased 600-fold. It soared. It just went up. And again, that makes sense. If you're in hyperinflation and staking more dollars to buy these stocks, well, so the theory, in theory, works out as whether or not it kind of works here is totally not in line, in my mind. I think we have much bigger problems, and that is what's going to be the downfall of our market. So it was a very strong down day in terms of what's going to happen tomorrow with the expiration. Now, that remains the golden ticket, because if we start getting some serious selling, like the selling then rolls over and the Asian markets start to sell, and then it rolls again and the European markets start to sell, and by the time we get it back, they've already got our markets down another 100 to 200 points, then this is it. That was the top. And we're going to see within our own marketplace where a lot of traders and firms wanted to see expiration happen. They're going to be making adjustments, and there's going to be a lot of scrambling to get that all together. And already I'm seeing, like in Facebook, you know, they were kind of starting to look like they were going to hone in on 230, and today they're down 550, which brings us back to 222. Yep, they're trying to bid it up in you know, as we move into globex, they want to start bidding things up again, and I'm like, okay, well, whatever you think you got to do, but I think a lot of it's going to get caught, and we'll see what happens tomorrow. Now, as far as the Elliott count goes, I'm leaving this with the option and with the ability for the market to go up, and maybe only gets to 15,315, which puts it at a new high. And that's all I need to see. And count it as 5. This is beginning again to look like it's too big. So here's the other choice that we got rolling around out there, that the A wave actually finished up here. And I got to bring this all back to to somehow get this A wave all the way up. You know, put wave 3 up here, wave 4 up here, and then, you know, where wave 5 or where the A wave has to go up, and that this is 4, and that this whole thing ends up being wave 5, and the A wave goes here, and we're now just doing this B wave, which kind of also can almost fit. But if that's the case, we've got a C wave still yet to come. And if I had to mark this up to here and to here, we are looking at a market that will likely go to new all-time highs. And that part, I actually have to present it, because I would be doing everybody a disservice if I did not. to show what the possibilities could be. Now, I'm not saying that this is what's going on, but I have to give you all of the alternate views that could include that. And how will we know? Well, it's going to take a little while before we realize that this goes up here and this goes over here, or, maybe there's still some more downside. As is, if it begins to break below the 200, then we're sinking. We're going to be dropping down pretty severely. Now, I'm going to take this out for the moment. And I'm just going to put on, for the moment, retracements. So even if this whole thing is the A wave, or is a 5-wave structure, whether I want to label it wave 1 or wave A or whatever, then this pullback hasn't even gotten to 236, which is a 14,716. 382 is at 14,375. If it drops all the way to there tomorrow, well, I need to leave open. Yes, I will be more inclined to say we're going to start to drop and continue to drop, but I'm going to have to it's going to have to be backed up with more than just the technical view. We've got to start to see where the other cracks are coming in, showing us that inflation is creaming us, that things are happening and the market is reacting to that versus, well, we're not going to get the interest rate rises that we should. So, but again, then tomorrow as well, folks, we have the employment situation or the employment numbers. And if they come out inflationary, we'll see what happens. We'll pick it up. But I'm leaving that there just to show where we now have support coming off. And that will be based on that all we're retracing is from that low, which is actually, these numbers are not going to be accurate. Let me just make that more accurate so that we get, so I can see more inside. This is going to be 2942.50, and that high is 152. Yeah, that one is correct. Okay, so that just straightens it out a little bit. So we have 14,720, we'll call it 14,380, and then 14,105. Again, if this starts to break down too far, then I am literally going to be calling it over. Now, if we only get down into here and this were to be the wave A, this would be wave 4. This would be 3, 4, and that's all 5. And then we'd be looking at a corrective decline to come into that low. And that sits right above 382. So this is the picture. I'm not declaring that this is all over and we're not just going down. I know I'm getting a lot of questions. If this happens or if that happens, would I declare the next larger third wave being in motion? If I get all the signals that I'm looking for, yes, I will say so, but it's too early. We need to get through tomorrow. We need to get through, are we really breaking the back of the reason that people are buying? And if that's the case, then we will see a large uptick in the size of the selling. So in other words, it's going to be covering a way more territory than the 150 points the 150 points that we saw this afternoon. It's going to go a lot quicker. It's going to go a lot faster. That's my take on this next sell. So if it just kind of walks its way down, holds levels, starts to rally, then we could be in for a much larger rise higher. But it got close. Look how close it got to the top of wave 1 at 14,840. Again, like I told you, I could drop this down to here and this over to here. But it's not something that I really want to do. I feel very strongly that we should be finishing an intermediate wave 2 and then start to drop more precipitously. So for tomorrow, we need to leave open that the buyers walk back in and they just say, the hell with you all, and they take this thing higher and they move it, and they move it strongly, and they get it back above 15,268. That's quite the feat. But you know what? We have seen so many stranger things that these markets have tossed out at us when larger players are at risk. And if that's the case tomorrow, they're not going to care. They're going to roll right over everybody if they've decided this is what we want, and they go and get it. So it has to be those larger players that have the power to come in and move the market. And you know, it's hedge funds, it's everybody, and they're all grouped together looking for what they're looking for. But if there's enough pressure, you know, enough public coming in and saying, no, we're out, we're selling, and they're getting the hedge funds just, you know, they're redeeming rather than holding. Again, these situations can all come into play, but the basis for my analysis is on the price action and also on the Elliott. So I will give you both sides, and both sides do say that we could be done, or we've only finished wave A, or this fourth wave is a little bit larger than what I expected, and we turn and we rally all through the night into tomorrow, into our session, and get above 15,268 and put in a new high to complete wave 5 and then complete the whole series. Those are our options. Now, if we continue to break down, we have the hourly 200 right here. A break below that is going to cause a rift in the force, and they're going to drop it quicker. I feel that pretty strongly. Now, then we're looking at 14,380. And break there, we're looking at 14,105. Now, again, if this is only the A wave, that B wave can come way all the way down here. That B wave can come all the way down into here and then still reverse. So this is going to take us some time. We really got to play with what's in front of us. Now, how do you want to trade that? Again, the question I get is like, what really is hurting a lot of the swing traders or a lot of option traders who want to put on a position that is effectively very directional. That's going to become more difficult as all of this plays out. Now, whether this is still a massive rally in existence and ongoing, or whether it's going to be an intermediate wave to completion, or whatever it tends to be. I'm going to continue to put through that a lot of what takes place and what we need to do is we have to have the right mindset. If your mindset is not so much on the height or on what's going on, but say again, if you're an option trader and what you really can be putting on quantitatively, you know, is just following what the quants are doing, and that's the HFT firms, and they're just out and they're looking to take care and get premium. They want to sell premium, they want to do the underlying, and then work the position. And so if you're an options trader and you really want to put on a directional bearish position, don't just buy a put. Do a directional trade, but do it via, put some risk, confined risk in there. And you can do that by doing a put spread, and which you'll get advantages of. Or, you know, you could be selling a call spread and capture premium in that spread. And then also the fact that it's likely going to go out worthless if we continue to drop, if we continue to fall. So my point here is that don't be afraid to continue to trade the direction the market's going in, because it's all going to depend on what you're actually choosing to do the trade. As a day trader, I can participate in up and down moves, make money every day, God willing, and, you know, be flat at the end of the day. And so that I taking my profit, then I come in fresh the next day. Working a position keeps you glued to what's going on. Waiting to put a position on could drive you crazy. Because, well, I'm more bearish. It's like, well, you can be bearish and the market can still go up and you can play it bearishly. But then why do I want to sit out if I'm waiting and waiting for this to finish? You're sitting out a lot of trades. And so again, it's what I think what we need to work on is our mindset. And because that's going to prevent us from doing a lot of things. But if we have the correct mindset and we know we can work things, then trading becomes a lot more focused and a lot more interesting. And again, if you have questions about mindset and questions about how to get that all together, please just put a comment in the comment section here on YouTube, and I will get back in contact with you and I can take things further if necessary. So for tomorrow, continued downside, 14,759. That's going to be an important level. That's where the 200 moving average, the hourly 200 MA is sitting. A break there and then a continued break below 14,720 drives us lower, drives us down to that 14,380 area. And that then starts to change the picture, granted. So I'm leaving it as it is. Upside, it's got to pick it up and it's got to start plowing back above all of these moving averages, which are now beginning to line up. I'll just show you for the downside. The 20 broke below the 50. So we've got them lined up. There's the 4, the 8, the 20, and the 50, all pointing down. Here's the lone holdout way down here, which is kind of gone flat. Not as flat as I would hope, but flat. So upside, they move fast and they get this all going and reverting and turning back higher again. Get that 20 back above the 50, get the 4 and the 8 back above the 50. That's the shorthand if the buyers really want to have control of this market. That's what they're going to have to do. So work accordingly, trade what's in front of you, use the moving averages to help you determine direction, determine where we're going to go, how fast we should go, et cetera, et cetera. But you have an upside, we have a downside. Right now, more people are favoring the downside. I'll tell you that right off the bat. So we'll see how that all plays out for tomorrow. Again, over the weekend, I was hoping to do it at the end of this intermediate wave 2. I may be early, I may be late, I'm not sure, but I do intend to post longer term updates to the long-term picture. And the post itself will be called, Are You Prepared? And so they'll probably be a little long and lengthy, but I'm hoping to get them out on Saturday so that, when I come back in on Sunday to make just the daily update, those will already be out. And then I can make reference to them and then we'll go with that. In the meantime, have a good trading day tomorrow and keep the mindset going. Even an option trader during the day, you're going to have a lot to do if we continue this. And I would participate. I would really try to make myself participate and not worry about how far it's going to go or where it's going to go. You can follow the price action, follow your 1 minute, your 2 minute, your 5 minute chart. Same deal. You're looking at your moving averages, you're seeing what's happening. You also can have the point of control, value area, high and low. All of that can be displayed on your chart. That gives you a lot of information for intraday trading and what's going on. And it's very helpful, and day trading has its value. I'm going to leave it there. I hope I'm including everything. If not, you got additional question, please go ahead. I do check the comments. Write me a comment, ask your question, I will answer you. Our next update will be on Sunday. Oh, by the way, tomorrow's April 1st. Hopefully the joke will not be on us. So that's why please stay open to everything. Tomorrow's April 1st, but the next update, there'll be one on April the 2nd. That'll be the little bit longer, or the larger picture update. And then our normal weekly, we get in on Sunday, and that'll be the 3rd.